75% of all US dollars in existence were created after Bitcoin was invented. Bitcoin's Genesis block was created on January the 3rd, 2009 at 1:15 p.m. You can go and see this for yourself, given that once something is on the blockchain, it can never leave. To work out what was happening in the classic world of money, we can look at something called the M1 money supply. The M1 money supply includes the monies that are liquid, such as cash, checking and current deposits, as well as travellers' checks. Conversely, M2 money is less liquid in nature, and it includes M1, plus other savings deposits, certificates of deposits and other money market funds. Crucially, the M1 money supply includes coins and currency in circulation. The coins and bills that circulate in an economy that the US Treasury does not hold at the Federal Reserve Bank or in any bank vaults. When the first Bitcoin block was mined, that M1 money figure was about 1.6 trillion US dollars. As 2021 started, it was 6.5 trillion. When you see this on a graph, it suddenly becomes very clear why the US has kept having to raise its debt ceiling. Another figure worth looking at over the same period is the US Fed total assets. When Bitcoin came out, the US Fed's total assets was about $2 trillion. So the US had gone through all of the 20th century on under $1 trillion, which will explain why so many people got bent out of shape when the 800 billion TARP program was unveiled. It effectively doubled the amount of money on the books. This isn't unique to the USA either. We can see a similar story if we look at the Bank of England. So what does this mean exactly? Before we answer that, we need to think about the velocity of money. If you think of the boom times of the 80s and 90s and how can it be so prosperous with very little money in circulation? This is where velocity comes in. Normally, if I go out for a drink, I'll tip the server. Then they spend part of that tip, say on a taxi ride to go home, and then the taxi driver spends part of that fare on filling up the tank in his car. And the attendant at the station is then paid with the money, and then they go out clubbing at the weekend, and the tip is going to a waitress. And this money is moving around. It doesn't stop. And so this is how it's measured. You can see this velocity of the M1 money on this chart. If you look at the velocity of money since Bitcoin was introduced, you can see that it's been slowing down for years. Why? After the 2007-2008 crisis, instead of going out for some drinks and then having this money whip around the country, it would go something a bit like this. I go out for a drink and I tip the server. The server has a crushing credit card debt owed to the bank ever since their original job was lost in the financial crisis. And so that tip basically goes straight to the bank, and nobody can afford to borrow money, so it kind of stops there. So what does the Fed do in a situation like this? Well, first it lowers the interest rates to try and get people to borrow money, and if they borrow money then they'll go and spend money, and therefore we get the velocity back up again. When that doesn't work, it lowers the rates more and more until you get to where we've effectively been for a few years, and that's zero. Second, because the velocity of money has slowed down, there's less taxes being collected, and so the Fed basically pumps more money into the system to compensate for that as well. During the COVID pandemic, the Fed and other countries literally sent checks to the people. But what many of them did was simply hand that to the bank to pay for their mortgage, to keep a roof over their head. So the Fed pumped more and more money into the economy in the hopes of spurring on consumer spending. For those that ended up with money to spare, this generally went in three directions. There was stocks, which pushed up the stock market artificially. There was commodities, such as silver and gold, as a hedge against this inflating money supply. Or, third, there was crypto, such as Bitcoin, for the same reason. In all three cases, the result was the same. The money was traded not for a consumable or service, but traded for an alternative to holding the money that the Fed was printing. So the velocity of each dollar spent basically just stopped dead in its tracks. Usually when you want to spur people into spending money, you allow them to borrow it more easily by lowering the interest rate. But that lever has already been pulled with 0% rates already for so many people. So they see the writing on the wall and interpret it as, something bad is about to happen. When I say many people, I'm not just talking about the average person on the street either. Hedge funds, banks and other institutions are all getting into crypto. Nearly all of them are putting large portions of their cash into Bitcoin. So in all of the time that Bitcoin has been about, the money has been losing velocity and the Fed and central banks have already exhausted the knobs and levers that they would usually pull. And there's also been another major world crisis thrown into the mix, which is the pandemic. Some people may argue that this extra money leads to stagflation or even hyperinflation, and in some circumstances it can. But right now, the most likely scenario is, I think, going to be as follows. 1. The stock market is clearly a bubble, and so that's going to have to correct. Number 2, things that cannot easily be generated will go up rapidly as people shift their money into those items. This means crypto or gold and silver, which don't increase much no matter how hard you try, will go up in price. Things that you can quickly scale up in an automated fashion, such as manufacturing of electronics, they will drop in price as everyone competes for less and less money going around in circulation. I've obviously glossed over a lot of the facets in this video, as this is a really big subject. But you should understand how it's possible that 3/4 of the money in existence now didn't even exist when Bitcoin was first created. If you like this video, give it a thumbs up. If you want to see more, then hit subscribe, and I'll speak to you soon.